this month. Let's break it down with Lynnette Khalfani-Cox, also known as the Money Coach. Lynnette, thanks for being with us here in studio.
Thank you. My pleasure to be here.
All right, let's talk about this tariff situation. First of all, we have the EU adding more tariffs in response. President Trump was kind of making the point at the G7 that his tariffs were in response to the earlier tariffs by the Europeans. The EU, for example, he likes to point this one out, currently has a 10% tariff on American auto imports. The US has just a 2.5% tariff on imported European cars. So he likes to point at the discrepancy there. But it does seem like now we're getting into an even bigger tit-for-tat tariff battle. What do you think?
That's absolutely right. Well, it's clear that things have escalated, right? And obviously we saw the abrupt departure of Trump from the G7 meeting and his refusal to sign off on the statement. And this, frankly, is what worries a lot of domestic economists in the United States, but even folks across the globe. They're sitting here thinking trade wars are no good for anybody. It does not benefit various economies. So we kind of, I don't know how much of this is sort of posturing,
right?
But, you know.
Because some strategists think that, and this is a way for the president to say, all right, we're dropping all
everything.
Tariffs. Yeah,
that's right.
Well,
he's actually said that. He's flat out said that. There's little to no chance, you know, that will actually happen. But this could be perhaps a negotiating position. We know that Donald Trump masters or, you know, considers himself a master deal maker. So this could be sort of the first salvo. And that's what some observers think. And it very well could move and shift things a little bit. But how it'll play out, you know, it's very tricky, especially when you look at between North America, the EU, et cetera, all very disparate, different economies and all having, you know, to reassess things given what Trump has said he's planning to do.
Well, it's an interesting take. He gets them to agree that tariffs on them are bad, and but not on the U.S. Let's move on to the ECB, the European Central Bank. It's now confirmed that it's going to end this huge asset purchasing program that it put in place after the financial crisis.
Right. This was back in 2015 they started, after the United States did pretty much the same thing. They've been in the marketplace buying a tremendous number of bonds, about 30 billion euros per month. So this $3 trillion effort is coming to an end now in December. I think it's actually a good thing. It's a sign that the Eurozone economy has strengthened quite a bit. Not quite as much. I mean, if you look at some of the data recently, for example, in the last quarter, the first quarter of 2018, we saw growth actually dipped from 0.7% to 0.4%. So it wasn't a panacea. It wasn't a magic bullet. And certainly policymakers have said that they could implement this bond buying program again if need be.
Yeah, it's an interesting point, especially with those developments politically in Italy and such. We saw an interesting development in the world of cryptocurrencies today. The Securities and Exchange Commission ruling that Ether, one of the leading cryptocurrencies, is not a security. Why does this make such a difference? Why did this spark a rally?
Well, this sparked a rally because just like the SEC said, Bitcoin is not a security. Folks are saying, oh, there's more options here for Ether to be more traded, to trade more often, that is, without so much oversight, regulation. I see it as kind of a double-edged sword, frankly, because the lack of regulation also means more volatility for people who choose to buy cryptocurrencies, whether it's Bitcoin, Ether, or some of the other ones. And frankly, for most investors around the globe, certainly this is what I've been telling people, both of these are very risky instruments. At the end of the day, there aren't the underlying fundamentals there. And even though personally I see the pros of blockchain technology upon which they're built, the instruments themselves, they're so new. Bitcoin just came around in 2009.
But you know, it depends on, very risky, absolutely very volatile. It depends when you jumped onto this Bitcoin trade.
Remember back in 2017, it started at 1,000 in January. Bitcoin went up to 20,000, and now it's under 7,000.
There's the chart. Look at, I mean, it's
talk about volatility there. You know, kind of hang on to your seat when you're deciding to jump into that marketplace.
Does it make sense though to diversify some of your portfolio into cryptocurrencies in one way or another?
No, to me, if you want my honest answer.
Absolutely, you're the money coach.
No, however, for those who have what I call kind of play money, potentially to lose, because frankly, that's what most of them have been doing lately. If you have it and you can withstand potential losses, then it might be okay. But overall, I would stick to major asset classes, stocks, bonds, mutual funds. They're classified as commodities, cryptos are, but nonetheless, tread very carefully. That's just my
You like to play it safe in the world of cryptos. Absolutely. We want your investment advice. Thank you so much. Good to have you with us. Really appreciate it. Lynnette Khalfani-Cox. Good to have you on the show.
Thank you.
All right.